My name is Grace Reeve, and I am here tonight to talk about taxes and how you can maximize your income by taking every single deduction that you should and can. And so hopefully we're going to have a good evening and you'll be able to ask questions and I'm going to show you some forms and we're going to talk through some of the concepts. Um, I want to first thank the staff of Child and Family Resources, which is in Morris County, because I have done similar webinars before, but I've never done them with all of the resources that I've written translated into Spanish, and they made that happen. So I really want to thank the staff, and you'll see as I go through some of the resources in Spanish, but it is super helpful. I appreciate their time and just wanted to thank them. So I'm going to bring up some slides. Hopefully everybody can see them. We're going to talk about getting ready to file your tax returns this spring. So it was for last year's income, 2023. Um, I know a lot of people have, this is not the best time of year thinking about filing your taxes. Most people think, ugh. So hopefully I'm going to help you with some of that tonight. And after this webinar, you're going to feel super prepared and ready to go. And we're not going to let you have tax season get you down because we want to help. So 2023, we're out of what was the height of the pandemic, but obviously COVID is still out there. Actually, my son and I were supposed to have dinner last night, and he called me and said, has COVID, so I know it's still out there. Um, I know many providers may have struggled with enrollment. I know some of you may have staff, maybe not, but maybe facing staffing challenges. Some of you, if a child gets COVID in your program, how you handle that, whether or not you have to, close for any short period. Your revenue, your income might have gone up and down. You might have had higher costs, whether that's health and safety or frankly, food and gas. The cost of things is up. And maybe you receive some government grants. And so we will go over in the slides all of these things. Really, this webinar is to help you get organized, understand how to think about it, what are the basic concepts, um, how to, handling the grants, common tax deductions. Maybe I've got some you haven't thought about. Um, Basic tax forms, which ones to use. There are several. I have screenshots of those slides and I'll tell you what goes where. I'm going to give you some record keeping tips to hopefully next year won't be as hard as this year. I'll give you some guides, and you can use them now, but you can also use them on an ongoing basis, and they might make tracking those deductible expenses easier. And then, of course, questions and answers. I want to make clear I'm not rendering legal, tax, or other professional advice. And if you require this type of help, that you should consult a professional or, CPA. What I am is a policy analyst. I understand the law. I know these forms. I know the business of family childcare. I do a lot of work with Childcare Aware of New Jersey, which is statewide, and also many of the individual child care resource and referral agencies within communities. So um, if you have questions, go ahead and ask. And hopefully I've got an answer. And if I don't, I will get back to you. Um, so with that, let's get started. Income. Everybody knows, I think, what income is. It's the money you take in. But in this case, it's not just obviously the payments that parents make to you. but it's also any state grants you received. Maybe there was a workforce bonus, maybe there was a stabilization grant, maybe it was other money from the state. That is also income. The food program, if any of you participate in that, it's called the Child and Adult Care Food Program, but most people just call it the food program. That's income. So what I want to show you is if you did get income, not from parents, but from other sources, you might have gotten a 1099 in the mail. So this is what the 1099 looks like. And under non-employee compensation, there might be some money. So I want to make sure that if you did get the 1099s, you know what to do with it, you know which form to use, you know where that money goes. The general rule is if you receive more than $600 from an entity, you should get a 1099. Again, parents don't give you 1099s. You got to keep a record of parent payments separately. But other sources of funds, you should get a 1099. That is what you see, the $3,000 listed on line 1. It may represent multiple things. Could be a grant, could be a child care subsidy paid by the state. If you don't receive 1099, you're not off the hook. If you did receive that money, you've got to claim it as income. Somewhere that may be reported to the IRS, and you don't want to have that discrepancy where you got money and you didn't report it. The other advice I would give you about the 1099s is that you double check and you make sure, is it the right amount? I'm not saying that, the state or anybody else, frankly, made a mistake, but I think it's just best practice to compare what you got from those other sources to what they put on the 1099. So I just give you that advice that double checking could be to your benefit. Maybe they said they gave you 10,000 and they didn't. Maybe they said they gave you 3 and it was really 5. Can go either way, but double checking is always a good practice. So where does the 1099 information go? It goes on an IRS form called Schedule C. And I've got a bunch of screenshots on different slides. We're going to go over it. But basically, if you look, you see line 6 is called other income. That's where you put that 3,000 that you saw on the previous slide from the 1099. And again, that 3,000 might represent multiple things. Could be stabilization, could be a bonus, from the state, a workforce bonus, or it could reflect child care subsidy payments. It would all be lumped into one. It wouldn't be separately stated. So what you want to do is go to other income line 6 on the Schedule C, and that's where it goes. I want to take a minute and explain something because I think I forgot to say it. The bottom of my slides, there's a Spanish translation. So I am hopeful that that is accurately portraying what I'm saying. But I also want to tell you, these slides will be posted on the Child Care Aware of New Jersey website. There might be some other CCRNRs that also post them. They will be posted in English and another version in Spanish with a screenshot of the slides of the forms in Spanish will also be posted. So you can click on either English version or Spanish version. Both are available. Again, thanks to the staff at Child and Family Resources for doing the translations for me. But both versions will be posted. If you want to see instructions that go with this form from the IRS, I just put the links on this slide. There's instructions in English, there's instructions in Spanish. But I'm kind of doing high-level overview. So here's again the two things together, kind of an excerpt of the Schedule C on the right and the 1099 on the left. And you can see right where that 3,000 goes. Now, if you have income from parents, which I'm sure you do, that goes on another line. That goes on line 1. which is gross receipts. So you put your money from parents on one line, and then under other income, if you got a 1099, that's where you put that money. So that was income. Now we're going to talk about deductible. What's deductible and where is it reported? And the Schedule C has two sections. One is income related, and the other part is expenses. So you can see I circled expenses. What are the expenses? What are the allowable expenses? Anything that's, an expense in the ordinary and necessary conduct of your business. That's kind of broad, ordinary and necessary, but that's what the IRS goes by. In general, the concepts are these are costs related to your business. Some of them, and we're going to get to that form, it's a different form, and I'll show you a screenshot of it. Some of them are shared expenses. Like if you bought a fridge in your garage and you used it only for food or frozen items for the kids in your childcare program, that would be 100% business expense because it's not used for your family. It's just used for the kids that you're in business to care for. But there are other expenses that are shared. Like if that fridge in the garage had stuff for your family and also the kids that you care for, that would be a shared expense. So that's treated a little differently, and we're going to go over that. The example I use is if you purchase a washer and dryer, like you use that regularly for the kids in your care, but you also use it, as part of your household. So you share that and it's partially deductible. And I'm going to go over the rules for that and the form for that. But I just want to separate out this Schedule C. This is a form that's related only to those expenses that are 100% for business. So it might be overkill, but people receive information different ways. And I wrote this worksheet, which basically goes through the Schedule C form and explains line by line in words, what is that line looking for? What does that mean? And so this is also available in English and Spanish, and it's posted. I have links in the slide, but the idea is, line one is advertising. That one is pretty self-explanatory. But I did, write out any expenses to advertise or promote your business, such as printing costs, business cards, brochures, mailers, flyers, things that cost you money to advertise that you're in business, you're taking kids. I'm kind of, making this up, but let's say you had one of those uh, papers where you tear off your name and phone number at the bottom and you posted it at the laundromat so that people know you're in business and you're caring for kids. Um, the cost of the paper, the cost of the pen, the travel cost of going to wherever you post it, those would all be considered, advertising. You could also, check the mileage, and that could be, I have a whole slide on mileage, but the point is, if it's related to your business and you're tracking it, and I have actually an expense worksheet tracker that I'll show you, but write it down, keep track of it, because at the end of the year, all these things, they add up. And as you can see from the document, there, are descriptions of the different line items on the IRS form where you can deduct things. And when you deduct from your total income, what you're doing is making your tax liability lower. What that means is you're going to pay less taxes. Nobody I know really likes to keep records, but everybody likes to pay less in taxes. So I do have some things that will help you keep track of the expenses. But the point is, if you keep track of these things, I have common expenses, listed below: playroom expenses, toys, books, child furniture, cubbies. If they're used 100% for your business, they're going to go under supplies. They're going to go on this form they may go under other expenses on the Schedule C. If they're partially used by you or your family, then we'll get to that slide about where those expenses that are shared can be deducted. I want to point out one thing because it can be confusing. If you look at line 24, it says travel and meals. I want to make sure to point out, if you serve meals and snacks to kids in your program, that's not the line where you put that expense. That expense goes under other expenses, which is line 27. I have a slide just on food and how to deduct your food costs, so I'm not going to get into it too much here. But I did want to point out, it can be a little bit tricky the way the IRS presents the form, because you see travel and meals and you might think, oh, that's where I put the kid meals. But that's not true. It goes under other expenses. Travel and meals means business meals. And so those are like 50% deductible. But I'll get to the slide about the food costs. The deduction is quite generous, and so I have a whole slide about it. But that does not go under travel and meals. It goes under other expenses, which is line 27. To the right, I just want to point out, because I think this is super helpful. So I have several screenshots of it on different slides where I think it might be helpful. NJC has a shared resources platform. And within that platform is an online family childcare toolkit. And there are tax tips in that toolkit. DFD, the Division of Family Development, has paid for every registered family childcare provider in New Jersey to have free access to this platform. So if you haven't checked it out, you might want to. I did include a link to the tax tips page in that on the slides. And I did circle the IRS Schedule C worksheet because this is what you're looking at right here. The Word version of what goes where on the Schedule C form. It's in English, it's in Spanish, got the links. But I did want to point out about the online platform because it might be helpful to you. And if you have trouble accessing it, you can let us know and we will try and help you. But DFD has paid for every registered provider to access it for free. So it's another resource for you. So this is just, a bigger screenshot so that you can see it better of the Schedule C. And on the right-hand side in the kind of yellowish box, I just put, for example, $100 in advertising. Where does it go? Oh, that's line 8. Oh, contract labor. Contract labor is like when you pay somebody to help you. That's line 11. Insurance, not your home insurance that goes on a different form. But if you have liability insurance, that would go on line 15. Supplies, like materials you purchase for your program, that goes on line 22. Office expenses like computer, paper, pens, things that help you administratively with your program, that would go on line 18. Other expenses, food. And again, I have a slide on that, so I'll tell you about it, but that goes on line 27. It seems like a lot, but understanding how to break down the form into something easy to understand sometimes help. I like to look and see what's the form, where do I put things, and just point it out. I'm very visual in that way. You might all be masters at this, but I just like the show me version. It does seem like a lot to track, but we do have a monthly expense log. It's available in English and Spanish. It's in Excel. What it has is a bunch of columns that line up with these items from the Schedule C. And, during the year, maybe it's Saturday morning, or maybe it's once a month. But take some time for you to track these expenses. So come March or April of next year, You don't have to gather everything and sort them, like what goes where. So it is something that you can use now because you can put receipts in the columns and see for yourself how they add up. And then you transfer that to the form. But it's also something you can use as an organizing tool on an ongoing basis in whatever way works for you best. Maybe it's an hour every Saturday morning, or maybe it's an hour once a month. But when you are able to keep records and track these expenses on an ongoing basis, it saves a lot of time at the end where you have to gather everything and figure out what goes where. So I just pointed out you can use it now, but you can also use it on an ongoing basis if you want. And there are links in Spanish and English. So we talked about deductions, expenses at 100% business. There are also deductible expenses that are shared expenses, and you report those on a different form. It's Form 8829. I have a bunch of screenshots of it, and we'll go through it. But for family childcare homes, particularly, you know, your office is your home, your business is your home. And so there are things that you buy specifically for your program, and those are 100% deductible. And there are other things that will be shared expenses, and that's okay. The IRS allows you to deduct them, not the full amount. We're going to go over what percentage you get to take, but those expenses should be tracked because you can take them. So, what are common deductions? So, let's say a den or playroom, the toys, rugs, furniture, books, materials. If the den is used only by the kids who are in childcare in your program, then these things are 100% deductible. If it's shared, because after the kids leave, you turn on the TV and your family, is in that room, that makes it a shared expense. So when you think about it, you just want to think through other areas in your home that it used exclusively for your business, because those things are 100% deductible, or other areas where you live in your home and it's also your business, and that is fine. Those things might be partially deductible, and we'll go over that. But as you can see from the examples that I listed, there's like a million things that can be at least partially deductible. And partially deductible is better than not counting those things at all, because every dime that you get to reduce your income by means you're going to pay less taxes. I'm going to show you the forms. I've got a couple of slides to show you. But think through your home, like the den, the living room, the bathroom, maybe the upstairs bedrooms. Maybe your kids who are in childcare use those to take a nap in. Maybe they don't, and that's okay. But if they use them even twice a week, that's, regularly used for the operation of your business. And that means that it's going to be at least partially deductible. So I'm going to show you the forms and what it looks like. So when you think about shared expenses, the way you know or figure out how much you get to deduct of those expenses, it's called the time space percentage. And it's basically a formula, and it's applied to those shared expenses. So it's like the time multiplied by the space. I'm going to go through it, but here's how to think about it. The time percent, the number of hours you use your home for your business, all the hours. I talk to lots of family childcare providers, and when they're doing the time space percentage, they're saying, well, I care for kids from like 8 a.m. to 5 p.m. And so that's their time. And I'm like, no, that's the time you care for kids. But I've never met a family childcare provider who didn't also spend time getting ready for the kids to come, cleaning, maybe preparing activities for the week, things that you do that support your program are time that you spent doing your business. For example, you're on this webinar tonight, and we are talking about tax preparation for family childcare providers. That is a business expense. You write down the hour or the 90 minutes that we spent on this webinar because that goes into the time calculation for how much time you spend on your business. So if you look at the bottom of the screen, this is a screenshot of an Excel document, and there's a link in English and Spanish to your right, but it's a tracker. And these are suggestions. You might have your own columns you want to add. But basically, it's saying, okay, on the left-hand side is the daily time with kids. Maybe it's 9 hours, maybe it's 10, maybe it's 12. Some of you are open super early in the morning and into the evening. Some of you may provide care on Saturday. I don't know. But, what is the hour for the day? Then maybe there's cleaning, maybe there's doing laundry, maybe there's preparing lessons, maybe there's paying bills, organizing your records to build parents. Parents pay you, it's keeping a record of who paid you. Um, any trainings or professional development. You register an NJCCIS to take something, you get credit for it. Also, that's your time, and that's your time in support of your business. So log that time. Um, Shopping for your program, uh, webinar, Zoom meetings. I already talked about that, like tonight. Any research you do. For example, maybe you research the CDC site to figure out um, how to clean if a child in your program got sick and you want to make sure nobody in your family gets sick and none of the other kids get sick. How do you super clean it? Um, or other research. Maybe a child's interested in science and you want to build in a science activity. Or a child's interested in, who knows, some exotic food and you want to look at recipes that might use that food. Um, but the point is, time you invest to learn something to better support your program, log that. Yard care, you know, raking, shoveling, um, parents have to come into your house. Your house is your business. So somebody drives by and your house doesn't look nice on the outside, maybe they're not going to stop and ask you if you can care for their kid, right? So you got to make sure, the inside and the outside look good, as part of your business. Parent engagement. I mention this because, you know, I talked to plenty of family childcare providers who you're supposed to pick up your child by 5 or 5:30, but then they stay and talk to you for like half an hour. Log it. That is time that you are in business. I know it's frustrating when parents don't pick the, children up on time because you have your own families to care for. But know that if they take time and they're talking to you and you're open, maybe later than you usually are, then that wasn't a 9-hour day. Maybe that was 9.5. But this time, if you log it, you know, the purpose of this spreadsheet is so every day you can jot it down. It may not seem like much. The first line says total daily time, 24 hours. I kind of made that up. But, it might not be unusual to have a 16-hour day when you figure out all of the different things you do to support your program. Log it, because when the time, and I'll show you, it might be the next slide or the one after, when time is multiplied by percent, the higher your time, the higher deduction is going to be. So that's why it's important to track all of your time, not just the time that you care for children. The space percentage, that's the number of square feet in your home and the amount that you use for your business. So I've got a slide that's going to go through it with you, but it is all of the space. Like I said before, if, some of your kids are napping in the den, fine. If they're napping in one of your own kids' bedrooms, that's space you're using for your program. Make sure that you capture all of the space, including, the garage, if you've got a freezer out there or fridge out there that's, holding some of the items that you use for your program, or the basement, if the kids go down there, or maybe in the basement you stock supplies. But if there are areas in your home that you regularly use, then you want the square foot for that room, because the bigger the square feet in your home that you use for your business, and the greater the time that you spend on your business, those things are multiplied together. And that gives you the percent of shared expenses. And there's a slide, so we'll go over it, but that's the concept of it. So let's say you spend $50 on arts and crafts supplies, and those are used 100% for your business. That's a $50 deduction. Let's say you spend $100 on toys, and they're used both for your business and maybe you have your own kids and they use them too. Okay, that's going to be multiplied by your time space percentage. And that's why it's important to try and figure out every ounce of time, every ounce of space, because the higher that percent, higher your deduction for that shared expense is going to be. Now, let's say you buy a nice sweater for yourself because you want to look good at your childcare business. That is not deductible. The IRS doesn't care. If it's personal clothes, you can't deduct it. Now, on the other hand, if you have a childcare program and you make up your own t-shirts or sweatshirts that have the name of your program, let's say Susie's Learning Center, that's advertising cost. That would be deductible. But if it's just, like regular clothes, um, personal, that's viewed as personal and it's not deductible.
Grace, we have a question in the chat regarding uniforms. Are they deductible?
Yes, uniforms are, because
Thank
uniforms
you.
are advertising. So uniforms would go on the Schedule C. Right now, we're talking about the 8829, which is a shared expense, but uniforms would be a form of advertising, and they would go on the Schedule C as 100% deduction. So let's go to a closer look at the time space percentage. It's super complicated. So I actually have, I think, at least 2 slides on this, and this is the first one. But this is a worksheet, which, like the one I did for the Schedule C, goes over in words what exactly that line means on the IRS form. So this is the 8829 form, and it's all about shared expenses. And it asks you, okay, area used regularly and exclusively for your business. I think this is a little tricky. And so my next slide is going to have a worksheet to show you how to do it and make sure you get the biggest deduction you can. But this worksheet explains in words how it lines up with the form. And if you look, you've got the space, you've got the time, and then the business percentage is the two multiplied together. And so it is a little bit complicated, but I do have this worksheet, which is in English and Spanish, which explains it in words. And I have an Excel spreadsheet, and that's on my next slide. And that will show you specifically how to get the most of your time and space. So you can calculate it and then transfer it to this part of the form. On the right-hand side, again, this is just the New Jersey Shared Resources Platform, the one that DFD has paid for every family childcare provider to access for free. And I just pointed out where these resources are on that site. They're actually in the process of updating it. So next week, this will be updated. But the links in my slides, they work now. So you can immediately get access to all of the worksheets, one-pagers, documents. But next week, this will be updated, and that will work as well. So this is the spreadsheet I was talking about. And if you want to access it, right in yellow, it says FCC Toolkit Excel template. It's in English and Spanish. But this is an Excel document, and basically it breaks down the time, space, percentage, I think, in a way that's easier to understand than the IRS form. So first, the line is, well, what are the total hours that you spend caring for kids during the month? If you spend 60 hours a week with the kids, it's 258 hours a month. So you would put in 258. How many business hours when the children aren't present? That's the thing most providers, they don't take. And I think, wow, you missed out on a lot of time, because I know so many of you spend a lot of time when the kids aren't there in support of your business. So let's say that's 60 hours. Then the total business hours is 318. So the percentage of time is basically a calculation of the hours in a year, but you don't have to figure that out. In green on the spreadsheet, that's where you put your personal information, how many hours. In blue, that's already built into the spreadsheet. It will calculate automatically. You don't have to know formulas. You don't have to know anything. It will just calculate it for you. So in this case, with 318 hours, that's 43.6% of the hours of in a year. Then there's two types of space, concepts about space. One is space used 100% for childcare. Like that might be if the den is only for the childcare kids and you don't use it because you put your family uses instead the living room, or maybe the basement. Your childcare kids use it, but your family really doesn't. So any space in your home that's 100% used for childcare is treated a little bit differently in the space calculation. So for 100% space, you would say, okay, how much is that space? In this case, it's 1,200 square feet. What's the total square footage of your home? Let's say it's 3,000, whatever it happens to be. And then your, when you divide it out, the total exclusive childcare use space is 40% of your home. You don't have to do the calculation. If you use the spreadsheet, all of the blue areas, it's a formula that will automatically fill in. So then there's the business and personal, the shared space. Most providers have lots of shared space. There are plenty of rooms that you use for your childcare kids, but you also use for your family. So how do you do that? Okay, so you take those that you regularly use for your program, and what's the square foot of that? In this case, it's 1,500. Your total square footage of your house, that's the same 3,000. You fill it in. The formula figures that out. Okay, that's 50%. So then when you come down to the last section, it's going to figure it out. The formula is blue. It's going to figure it out for you. What is the time, multiplied by the mixed use? That's 21.7%. What is the exclusive use? The time times the space used exclusively for your childcare program. That's 40%. When you add the 21.7 plus the 40, you get 61.8%. What that means, not to bore you to tears, but what that means is on the shared expenses, you're going to be able to take almost 62% of those shared expenses as a deduction. That's super important. And that's why it's really, really important to include all of the hours that you use in support of your business, not just with the kids. All of the space that you use with the kids in your home, because that's divided by the total space. And that is how you maximize your time space, which gets you the highest percent possible to take against the shared expenses. And what that means is, bigger deductions, lower taxes. So at the top are the links to this Excel templates if you want to use it. It's in English and Spanish. At the bottom, there's the Form 8829 worksheet, the one from the previous slide, which explains in words what each line means on the form. And then there's a one-pager on what is that time space percentage? It's so confusing. I just wrote a one-pager on it. Like, what is it? How do you think about it? And these are just different resources because you can explain the same thing multiple ways, and one of them is going to catch with somebody. So I like to put them all out there, and people choose to use what helps them best to understand it. And again, on the right-hand side are links to the online family childcare toolkit and where these resources are located. And next week, they'll be updated, but all of the links in my slides are live now.
Grace, we just had two quick questions before you move
Okay.
on. Does the backyard count as space if you use it for playtime for children?
The backyard doesn't count. I wish I could tell you that it counted. But what does count is if you've got a swing set back there, or if you've got any ride-on toys, or sandbox, or kiddie swimming pool, all of the things you might have purchased for the childcare kids to use, those are going to be deductible expenses. But your backyard is not. But all of the things that you might use that the kids play with in the backyard are deductible. And if you have to maintain it, like rake it or shovel it, and you pay someone to do that, those are shared expenses. They benefit your home, but they also benefit your business. So there are different ways to look at it, but you can kind of maximize how can I, get something out of that backyard that my childcare kids use. And there's, a bunch of different ways to get a deduction out of it. Kayla, were there two
Thank
questions?
you. Yes, there's what is
Okay.
the percentage for the shared space?
The shared space percentage is okay. There's two things about it. One, the shared space is how much in square feet do you use for your childcare business? And that's divided by the total square feet of your home. And that would be the shared space. But to make this a little bit more complicated, it's not just the space that gets you the deduction. It's also your time, because the two are multiplied together. So that's why you really need to maximize the time that you spend so that you have a high time factor, and that's multiplied by your space. So think of all the space, get the biggest space percentage that you can, and all the time, and get the biggest time percentage that you can. And then they're multiplied together. And that final number is what is applied against your shared expenses and becomes your deduction. It might be, yeah, I can show you on this. Okay. So
And then we just,
yeah,
sorry, we just had one more
sure.
that just came in and is a new fence deduction.
A new fence?
Yes.
Absolutely. But that would be 100% because, you need it for the safety of your childcare kids. So if you get a new fence, that is a business expense.
We had a few more come in. Is it
Sure.
better to have a W-2 from my business to get paid for those hours?
That's a complicated one. I would say no. Um, you're really an independent contractor. You're your own, it's your own business. Um, and there's so many things that you can get like a deduction for. I would say that is something you may want to talk to a CPA about and see what best fits your business. But as a sole proprietor, which is kind of the business term for what you do and running your own home-based business, um, you do have a lot of choices to make. Um, so I don't want to give you advice. What I want to tell you is talk to a CPA and ask what best is going to work for you. I actually have two other sides on that too, for certain expenses. But good question. I will answer it by saying you're a sole proprietor. Maybe talk to a CPA on what works best for you.
And then two more, and then I'll let you move on to the next slide. Can you write off your mortgage payment?
You can write, well, that's a great question. Let me see if it's on here. Yes. Okay. So this is actually my next slide, so I'm just going to go there. There's a line for mortgage interest, but because you live in your home, it's a shared expense. So if, for example, I'm kind of making this up, but let's say you had a second home and you used that for your childcare business, but you didn't live there, or you rented a second home and you used that for your childcare business and you didn't live there. That would be 100% deductible. But when it comes to your own mortgage interest, because you also live in your home, that's a shared expense. So yes, you can deduct mortgage interest, but at the end of the day, look at mortgage interest. It goes on line 10, right? Then if you look all the way down at the, let's see, line 24, I circled it actually. That's going to multiply all of those shared expenses by whatever your time space percentage is. And that's how you get to a bottom line of what is it that you can take as a deduction. So, um, complicated question, but the bottom line is yes, mortgage interest is a shared expense. Yes, it's subject to the time space percent. And yes, you will get a partial deduction for it, unless you've got a second home and you don't live there. And that becomes 100% business expense because you don't live there. Okay.
And then last question, HOA amount for grass cutting and snow cleaning.
HOAs. Well, here's what I would tell you. That's a shared expense, because you live in your home. So yes, that would represent a deductible expense, but how it's treated. Is it 100% business? No, it's a shared expense. So yeah, keep track of those HOA fees. I'm not a big fan, but keep track of them. They're worth at least a partial deduction. What you need to have though, um, are records, good records. So in the worksheet I showed on a previous slide, there was a business expense worksheet with a bunch of categories. What you want to make sure that you have are written records that substantiate any business expense you take. I don't know what the HOA fee is, but let's say it's, 100 a month or 200 a quarter or something. And it goes to the things that you just talked about. Um, Make sure you have a receipt, HOA expenses for snow removal, lawn cutting, leaf blowing, whatever it happens to be. But you want to document the date, the the vendor, in this case it'd be HOA or whatever, and the purpose, whatever those purposes are, and the amount. Because you need to have backup written documentation in case you were ever audited, so that any business deduction that you take, you can substantiate. Um, it's not enough, for example, let's say you go to Target and you buy a bunch of things for your program, paper towels, um, toilet paper, markers, cleaning supplies, and they're all for your business, right? What you want to make sure is you keep a record, of that. Yeah, your credit card statement is going to be a record, but it's only going to say, Target card services for $120. It's not going to say what that charge was for. So you need to make sure you have a written record. It doesn't matter if it's a notebook or an Excel spreadsheet or whatever way that works for you best. I like Excel, but whatever way works for you best, that you keep track of it, because all these things are totally deductible. But in the event there was ever an audit, and you never know, that's like a roll of the dice, who knows, you've got to be able to show documentation to back up any business expense. It's not just, the HOA expense. It's if you go to Target, what did you what did you, purchase? So good practice is, Saturday morning, spend an hour documenting things, or once a month, spend an hour or two, so that ongoing basis, you're keeping those records. So it's not a big hassle come March or April of the next year to figure out, well, how many business expenses did I have? Because it's not good enough really to go to your bank statements or your credit card statements, because they're not detailed enough. They're not going to show the purpose. They're just going to show the overall purchase. I'm not picking on Target. Could be Walmart, could be Costco, wherever you go, uh, you've got to be able to document the expense, the date, the vendor, the purpose of, what it was that you purchased that is, eligible for either 100% business expense or shared expense, and, keep that. Um, okay. So this is just like this Schedule C worksheet that I did that explains in words, line by line, what the lines mean. I did that for Form 8829 too. So this is available in English and Spanish. I will say, because we're looking at these slides in English, but some people might be looking later in Spanish. Um, the Spanish version, the Schedule C form, the IRS has translated into Spanish. The IRS Form 8829, they have not. I don't know why. I don't run the IRS. I don't make those decisions. But I can tell you, I scoured that website because I wanted to make sure every year they make changes. Maybe they translated it, but they have not. So if you go to that page on the IRS website and you switch the language to Spanish, it will come up and say in Spanish, sorry, this document's not available in Spanish. But what I thought was super helpful that the staff at Child and Family Resources in Morris County did was take the documents that I wrote in English and translate them to Spanish. And where possible, I have screenshots of IRS forms in Spanish. And where not possible, I have it in English, but at least you have the descriptions all in Spanish. So that worksheet that explains everything, there's a link for it in English and Spanish. I would just, point out, like, if you look at line 24, that's where you multiply your shared expenses by your time space percentage. And then when you get down to line 36, that's the bottom line amount of expenses that you would then transfer to Schedule C, the other form that I was showing you. So it is kind of complicated, but when you're looking at it, it kind of makes sense when you see the description next to the form and you understand these things kind of weave together. But it's government, so it is, a little governmenty, but hopefully you get the concepts and you will either be able to do it yourself or maybe somebody can help, or you can go to a tax preparer. I think I have a last slide on, finding one. But if someone helps you with the taxes, a tax preparer of some type, it's a deductible expense. So just log it, that they're certified CPA or whatever it is. But what's important is to understand the concepts, because when you do go to someone professionally for help, they may or may not understand the business of family childcare. So you want to have those concepts in mind so you can say, hey, what about the time space percentage? Hey, what about my shared expenses? I mean, these are important things and they're going to save you money because every deduction you take is going to reduce your taxable income. And that means you pay lower taxes. So this is another screenshot of the same 8829 form, not because I want to bore you, but because I want to show you how these things fit together. So, 10B, that's where the mortgage loan interest goes. 11B, that's where you pay property taxes if you own a home. That goes. Homeowners insurance. The Schedule C had a line about insurance, and I pointed out that's for professional or liability insurance. Your homeowner's insurance is a shared expense because you live in your home. So that would go on this form, or rent or utilities. All of those are shared expenses. And then you get down to the bottom and it's going to be multiplied by your time space percentage. And that's how you're going to know what your bottom line deduction is that you bring over to the Schedule C. There's also an area about depreciation. It's super complicated. My advice to you is, if you do own a home, you should depreciate your home, and you should get professional advice from the CPA who's helping you with your taxes in order to take that depreciation over time. There are choices to make, what was the purchase price of your home, and, what is its value now, and decisions to make. And those are things that you would personally want to discuss as to what best helps you on your taxes as to how to take that. So when to use Schedule C, when to use, 8829. These are both of the forms. On the Spanish side, you'll see Schedule C in Spanish and the 8829 form in English. I'm sorry about that. Did the best I could on these screenshots. Think about it as Schedule C, 100% business expenses. 8829, that's the form for shared expenses. Both come together. Both are good. Both are going to help you reduce your taxes. So car expenses. I have a separate slide on this because there are two ways to think about it, and it can be super easy or it can be super complicated. I like the easy version, but really talk to your CPA about what is best going to benefit your situation. So here's the bottom line to it. There's a standard mileage amount that the IRS sets every year that you can take against business miles. 65.5 cents per mile. Again, you got to keep a log. If you go pick up the kids from school and you drop them off, if you are doing business errands, anytime you use your car for business purposes, write it down. It may seem like a hassle, but the issue is at the end of the year, it all adds up and you multiply those miles by 65.5 cents and it pays off. I mean, that again is another deduction you get to take. The records are important. What I can tell you is think about all the different ways you may use your own personal vehicle to support your business. Those are the miles you want to track. So the other way is actual expenses. And that's where you keep receipts for everything under the sun that you spend, gas, oil changes, repairs, maintenance, everything. You save those receipts. And then you look at the total mileage you took that year versus the business miles, and you get a percent of it. My own view, I'm not giving you advice, I'm just saying my own view. Man, there's enough records to keep. I'd rather just take the 65.5 cents against the mileage than have to keep all those tiny slips of paper and log them and account for them and, add it all up and all that. Really, it's what supports your family, your own situation best. And this would be a question to ask somebody who's helping you prepare the taxes. So two ways. One is relatively easy. One, it's not really hard. It's a lot of work to keep all those receipts and make sure you've got every single one of them and you're, adding them all up. And one may work better for you than another, but best to consult with a CPA who does your taxes on that or ask them about it. What would fit your business best or what you're personally comfortable with. Food. So personally, I love this slide because when I talk to people, a lot of people don't know it. Some people may participate in the food program. If you do, great. But whether you do or not, you can take a food deduction, the meals and snacks you serve for the kids in your home. So let's go how that works. You don't need to save receipts. Yay. Enough records. At the end of the year, you add up all the meals and snacks that you served and you multiply it by a rate. It's actually the food program rate, but you multiply it by this rate, but it's more generous. So for example, you get $1.66 for breakfast. You get $3.04 for lunch or dinner. You get 97 cents per snack. And, it is one breakfast, one lunch, and three snacks. And sometimes it is dinner. So these things, they add up. If you just look at one child who has breakfast and lunch with you and three snacks a day, that's $7.61 a day. That's $38 a week. That's $1,978 a year for that one kid. If you've got 5 kids in your care, that's $9,800 a year. That's almost a $10,000 deduction. I mean, that is a lot of money. So it's important to understand you can't take a deduction for your own kids. Yeah, you got to feed them. I've got 3, you got to feed them. But you can't take a deduction, but you can for the kids whose parents pay you for care, your childcare kids. That's who it applies to. You might even have more than 5. I mean, I know there are some who you can only have 5 at one time, but you might have two kids that are part-time, and so then you really have 7. So, you know, there could be different ways to look at this, over time. Um, I highly recommend that you think about it. And again, this goes on the Schedule C under other expenses. It's a food expense. Now, if you do get reimbursement from the food program, the Child and Adult Care Food Program, that goes on your tax forms as income. That goes, you remember I showed you the 1099 and where that money goes as other income? So you would count that government money. It's actually the federal government that funds CACFP, and then states administer it. And for family childcare homes, I know many of the childcare resource and referral agencies are the sponsors of the program. But the money that you get for the food program, if you do get reimbursed, that counts as income. But even though it's income, you will get an even larger deduction from what the IRS allows you to deduct. And not that I'm pitching non-nutritious food. I wouldn't do that. I'm a big believer in the food program and always nutritious meals and snacks. But the IRS allows you this amount without even rules for nutrition. So, for example, like you wanted to give a popsicle, it's a hot summer day. And you buy a bag of, let's say, a box of 10 popsicles and it's $2. You know, you get 97 cents for each of those popsicles as you give them out to the kids. Or you have Girl Scout cookies. They're getting more expensive now. I just bought some, but every kid gets 2 Girl Scout cookies. That's 97 cents for each of those 2 cookies. I mean, per kid. Like, this really adds up when you think about it. But what you have to do, and I have a meal tracker template here, in English and Spanish, but what you have to do is keep records. Who was in your care that day? Did they eat breakfast? Check it. Did they eat, lunch? Check it. Did they have morning snack, afternoon snack? I know this one provider I was talking to one time, and as the parents picked up the kids to go out the door, she gave them each 2 Ritz crackers. Oh, 97 cents. That was the third snack of the day. I mean, this is kind of on you and what you do, what fits best for your program. And I'm definitely not pitching anything non-nutritious, but I'm just saying, you know, in the food program, you're not going to get reimbursed for that popsicle, but the IRS is going to let you deduct 97 cents for it. So just saying, think about it. The other, because there's 2 ways to think about the food, expenses, is the actual food cost. Keep all your receipts, estimate any of the, food costs for the kids in your care, but you can't count your own kids' food. And, it's tough because let's say you make eggs in the morning. Are 2 of those eggs used by you? 2 eggs, 3 eggs for your kids? I mean, to me, it's harder and much more work to keep every single receipt and then back out of those receipts any personal food um, than it is to just say, "Hey, I'll take those rates the IRS allows," and run with that. You can't do both, so you got to choose one or the other. You can ask your CPA or somebody who helps you do your taxes what might be best for you. My view, the IRS rules are pretty generous, and you don't have to keep receipts. And there's enough about your business you do have to keep receipts for and document. It's the easier route. But if you think it's going to be more money to you by keeping the actual receipts and making sure you cross off anything that's personal, you could do that too. There are options. So now we're coming to the end. I might only have one more slide after this, but there are 3 one-pagers that I have. One's on the time space percentage, one's on Schedule C, one's on the Form 8829, and I link to them in other sections of the slides, but I just grouped them here at the end. Just as a reminder, these are just conceptual. They're not detailed. They're like a screenshot of the slide and some basic concept of what is this document about. If you speak Spanish, you can call the IRS and get help in Spanish. Um, on the free tax help on the yellowish box, I put links to IRS resources and also videos. Who knew? IRS is on YouTube now, and many helpful videos that they have. There's also small business development centers. If you click on that link and you put in your zip code, they'll tell you the one closest to you. You can call them. Tom Copeland, I'm a huge fan. He's retired now, but his resources are still being maintained on a website. So I put in some links. And the online family childcare toolkit, the tax tick section, I did a bunch of screenshots of it, but it is super helpful. DFD is paying for it. Check it out. If you need help, let your CCR&R know. They'll help you. On the right-hand side, all of the resources that are in the slides, I just grouped them all together so they're in one place with links in English and Spanish. And I guess I'm ending with, if you want to maximize your income, you got to take every deduction that's available for you. It might take some time on the record-keeping front, but I think it's worth it because in the end of the day, it's money. You pay less in taxes. Right now, if you haven't kept your records this way, it might be a lot of work, but it's worth it because it's going to save you money. If you aren't keeping these types of records, then going forward, you can. You can start it. Download the template and use it, or any of the worksheets and use them. Because next year around this time, you'll be set up good to not have so much work to do, next spring. Anyway, I wanted to end with Finding a Tax Professional to Help You by Tom Copeland, because he wrote a good article about it. How to find and choose a tax preparer video. Some questions to ask. I will say, if you're looking for someone to help you with your taxes, make sure they're certified. The IRS has a list. You can go to their site. I link to it in English and Spanish. You definitely, when you walk in the door, want to say, have you ever done it? Tax returns before for somebody running a family childcare home business? If the answer is no, you might want to say, is there anybody here that has? If the answer is still no, then you might want to look around and shop for somebody who has, because you run a niche business. It's unique to you. And most people who aren't running a home-based childcare business don't really understand what you do and what you purchase and what your expenses are and how your business operates and the whole time space thing. And so I would look for someone who's experienced so that you can get the best tax advice possible and take every deduction possible and, lower your taxes. I guess in ending, I will ask if anybody has any questions, but I want to say I've done a lot of work with Tom Copeland. He was big in this area for decades. He recently retired. Um, but I am grateful to all of his work over those decades and appreciate all of his work, and, just want to thank him for that. And with that, I will ask if anybody has any questions.
There are a few in the chat. I think some of the things that you may have addressed, but someone asked about car expenses.
Mhm. So on the car expenses, if you're using your car for business and personal purposes, that would be a shared expense. On the mileage, um, a lot of people, until it's tax time, don't think about, did I keep the mileage? I mean, you might be able to reconstruct it. For example, on the mileage, you want to get that 65.5 cents, per mile. If you do have a record of, every day, for example, if you pick up kids from school or you drop kids from school, you can figure out the mileage for that, even after the fact. But what's important is you create a record for it. You could go to your maybe it's a credit card bill from Walmart or, Costco or Target. Um, and if that's 5 miles from your home, you can figure that out later. But what's really best is on an ongoing basis, just keep a little notebook in your car, in the glove compartment, and then you can write it down. And then once a month, you can enter it into a ledger so that you're keeping it. But you can reconstruct it, but reconstruct it through a record that if you ever did get audited, would pass the sniff test because, you know, no, nobody, well, the chances of auditing are very small, but I feel like under full disclosure, I should tell you it's always possible. And that's why it's always best to keep the best records that you can. So if it ever did happen, then you're not sweating it. Here, let me come back.
To confirm, mortgage interest is deductible, not the mortgage payment.
Right. And it's mortgage interest is a shared expense because you live in your home. But when you put in your mortgage interest on the line, it's like all these lines, you put in all the expenses, and then at the end, it'll say, okay, multiply lines, whatever, total all lines, and then multiply that total by your time space percentage, which is why it's super important to get the highest time and the highest space possible, because that's what, in the end, is multiplied against all of your shared expenses.
And the last question, electricity, sewer, water is shared expenses.
Absolutely. And super important. And, if you have those things, you've got bills for them. So those are your records, right? Shared expenses, gas, electric, water, utility, any of the utilities, Wi-Fi.
Can rent be written off?
Rent can be written off, if you're, yes, rent will be a shared expense. I was going to say, if you rent another place, it's 100% business. Right? If you have like a second apartment or a second home that you only use for childcare, that would be 100%. Otherwise, rent is a shared expense because you also live there. I mean, the basic concept is there are millions. I could never like write them all down. There are so many shared expenses. But when it's tax time or best case on an ongoing basis, write them down when you purchase anything that's a shared expense. And then at the end of the year, you're going to have them, if you use the worksheet, you're going to have them in the right bucket, the right category, you know? So for example, fees or, um, you know, if you were to take a class, to better support your business, those would be business expenses. But if you buy, I don't know, paper plates for the kids in your program to eat from, that might be business. What?
I don't believe that we have any additional questions at this time. Just a lot of thank you for the information, and the presentation was excellent.
Well, I was gonna say we recorded it, so we will be posting it. And the slides, we will be posting the slides both in English and Spanish so that you'll have access to those. They'll be on the Child Care Aware of New Jersey website. And Kayla, if you have a record of everyone who attended, you can also send them a link so they have it.
Yes, I will be sending out an email.
Okay.
Well, thank you so much, Grace, for all the information. That was so helpful. And thank you everyone for attending tonight.
Well, thanks for hanging out with me at the end of a workday into, the evening. And hopefully I answered your questions and you've got some good concepts now. and on you go to save money and pay lower taxes.
Good night, everyone.
Good night.
Thank you. Good night.
Night. Thank you for the info.